Good morning, everyone. The purpose of this presentation is to provide an update on economic conditions in the region since our last press briefing, which was back in November. So the focus of this discussion this morning is going to be on jobs in the region. I think we're all familiar with the deep job loss that we suffered during the Great Recession. I'm going to focus my efforts today on trying to talk about the kinds of jobs that have been created during the recovery. And I'm going to focus on three areas. The first is recent economic performance, and what I'm going to show you is that New York City has remained on a strong growth trajectory. We've seen some weakness in northern New Jersey to start the year, and there's been some signs of firming in Puerto Rico. What's the implication for all this in terms of the status of the jobs recovery? What I'll show you is that a growing number of places in the region have now gained back the jobs that were lost during the Great Recession. And then I'll spend about half the presentation looking at this question of the types of jobs that were lost and gained. And what I'll show you is that the middle skill jobs were actually hardest hit during the recession. And many of these jobs have not come back during the recovery. Instead, during the recovery, what we've seen is that job growth has been concentrated in the higher and the lower skill segments of the workforce. All right, so with that said, let me start off and give you an update on recent economic performance. So in order to set the scene here, the first thing I'm going to talk about is regional economic activity. And so in order to measure economic activity at the regional level, we calculate coincident economic indicators, or CEIs. And these are just a summary measure that helps us track the regional business cycle. What I'm going to show you this morning goes through April. We just released these this morning, so this is brand new information. And the first CEI that I'm showing you here is for New York City. And you can see that leading into the last press briefing, New York City was on a very strong growth trajectory, and that more or less has continued since our last briefing in November. What about New York State as a whole? You can see that New York State as a whole has been growing, but at a more moderate pace. And this largely reflects the slower growing parts of our district, mostly in upstate New York. The pace of growth is more or less held steady there since the last briefing. What about New Jersey? New Jersey was on a more moderate pace, a little bit weaker than New York State, leading to last briefing, and you can see that activity in New Jersey has actually leveled out since we met last. And then finally, focusing on Puerto Rico, you can see that since the last briefing, activity has actually leveled out some, firmed up a bit, but the big picture in Puerto Rico is that the decline has been going on for a long time, and the level of activity, even though it's firmed, is very low still. All right, now turning to jobs. What I'm plotting out here is an index of employment growth from 2010 to the present. I chose this time period because even though the Great Recession officially ended in June of 2009, the jobs recovery didn't actually start until the early part of 2010. And so what this is really capturing is job growth in the U.S. and in downstate New York through the recovery. And you can see that downstate New York and the United States were on a very similar growth path leading up through the last press briefing. That's more or less continued since then, with downstate New York weakening just a hair relative to the U.S. overall. Another advantage of looking at these employment data is it allows us to look at a little bit more disaggregated parts of the region. So let me now show you what's been going on in upstate New York specifically. You can see upstate New York has been on a more modest growth trajectory. And in fact, really since the late part of 2012, continuing really since our last press briefing, there's been virtually no new job growth in that part of the region. Now this is actually a return to a fairly typical pattern for upstate New York. It's a slow-growing part of the region, and it's particularly the case, coming out of recessions and in recovery. So this is actually more of what we've seen in the past. What about northern New Jersey? Northern New Jersey was more or less mirroring what was happening in upstate New York until the beginning of 2013. When it started to pull away, it looked like it was starting to gain a little bit of momentum. Since the last press briefing, we've actually seen some job declines in northern New Jersey. Most likely that's because of the harsh winter weather that we've had. And you can actually see with the April number, there's been some rebound in employment growth there. And then lastly, focusing on Puerto Rico, the good news is since the last briefing, we've actually seen a nice uptick in employment. But again, stepping back and looking at the big picture, really there's no meaningful jobs recovery occurring on the island. All right, so let me give you a little bit of a flavor for the sectors that are contributing to these job patterns. So what this is a chart of 4 different parts of our region: downstate New York, upstate New York, northern New Jersey, and Puerto Rico. And it looks at net job growth by sector in these parts of the region. And this is over the last year or so. And just like the U.S. overall, there's really been 3 main sectors that have been contributing to the region's job growth. Health and education services has been very important, professional and business services, as well as leisure and hospitality. Now, what about sectors that are sort of weighing on job growth? Well, it still is the case that government jobs have continued to weigh on job growth throughout most of the region. In fact, if you look at downstate New York, government jobs are really the only sector that continues to weigh against overall job growth. In upstate New York and in Puerto Rico, you can see that this job loss has actually been fairly significant, especially in Puerto Rico. And it's important to keep in mind in Puerto Rico, this is actually a fairly large sector of the economy. So when those jobs are lost, it has a larger effect than in other parts of the region. The one part of the region that sort of stands out as a bit different is northern New Jersey, and you can see that over at least the last year, the government sector has been a very small net positive. And this largely reflects the fact that New Jersey shed these government jobs much earlier on in the process. And so what we've seen more recently is a very positive small effect from government. All right, let me turn now to thinking about the status of the jobs recovery. What does all of this employment growth mean in terms of where we stand in terms of gaining back the number of jobs that were lost during the Great Recession? Well, with the very positive April jobs report we had for the U.S. overall, the U.S. is now just about back to where we were before the Great Recession. We're actually at 99% of the jobs that were lost have been gained back. And so while we've had sort of broad growth throughout the region, how far different places are in terms of reaching these milestones actually varies quite considerably across the region. So there are some spots in the region where all of the jobs have been gained back, in many cases well more than existed before the Great Recession. Places like New York City and Long Island, Ithaca, a fairly new entrant into this category is Poughkeepsie. There's also a few places that are quite close to this benchmark. Buffalo, Rochester, and Albany have gained back at least 3/4 of the jobs that were lost during the downturn. These are all economies that are, relatively large for the region, are much more diversified than they were historically, and have really weathered this past recession recovery quite well. Nonetheless, there are some places in the region that continue to have a weak recovery. So a few spots in upstate New York, like Syracuse and Glens Falls. You can see some places down in the Hudson Valley, and all of northern New Jersey are in this category where they haven't gained back 3/4 of the jobs yet. And then lastly, there are some places that have really not yet shown any real meaningful signs of a jobs recovery. Places like Utica, Elmira, and Binghamton, and of course, as we've talked about before, Puerto Rico. So while we're making progress, that progress has been variable within the region. Right, well, how does this recent experience sort of compare to previous cycles? So in order to fix ideas here, I want to show you first what's been going on in the U.S., and this should be a somewhat familiar picture. This is an employment index. We call these spider charts. What we do is we set the index equal to 100 at the start of the recession, so focusing on this red line here, that's the start of the Great Recession, and we show how the employment changes 1 year, 2 year, out 6 years into the future. And this is a comparison between the Great Recession and recovery to the recession that happened in the early 2000s and the recession and recovery in the early 1990s. And it's important to keep in mind that these earlier recessions were the ones that were dubbed the jobless recoveries. And what you see here is that the Great Recession in the U.S. overall was much more significant in terms of the downturn. It lasted much longer, and it's actually taken much, much longer to get back to the number of jobs that existed pre-recession. Well, how does this pattern look for our region? Well, first, let's take a look at New York City compared to the U.S. overall. And in fact, in New York City, we have actually the exact opposite pattern. In New York City, the Great Recession was not one of the worst recessions and recoveries that the region has experienced. It's actually experienced a very robust recovery right now. And again, it's important to keep in mind that this has really happened without a strong contribution in terms of employment from Wall Street. What about upstate New York? You can see that the Great Recession is basically in line with historical trends in the upstate region, but it's, again, important to keep in mind here that the Great Recession was not the worst experience for that part of the region either. What about northern New Jersey? You can see here with northern New Jersey that the experience is very, very similar to what happened in the early 1990s, and both of these experiences were worse than the early 2000s downturn in recovery. All right, so now with this information in mind, and I've shown you that in many parts of the region we've gained back or are very close to gaining back the number of jobs that existed before the recession, I want to focus a little bit on the types of jobs that were lost and gained. And I'll show you that it's not the same. In fact, recessions and recoveries are oftentimes of great transformation in the economy. And even though we've returned the number of jobs that existed, the mix of jobs has actually changed quite substantially. So in order to do this type of analysis, we're going to focus in on occupations. Occupations are a way to get a real view into the kinds of things people do in their jobs, which helps us map into skills categories. And we're going to use 3 skills categories: higher skill, middle skill, and lower skill. These skills categories, you might remember, are somewhat familiar from things we've done in the past. We've used a similar categorization when we've looked at this issue of job polarization. And what we now know is that job polarization, while it has been occurring over several decades and is a very long-term trend, it actually turns out that this movement into high and low skill jobs and away from middle skill jobs happens right around recessions and recoveries. And so what we're going to be able to show you now is what's actually happened during the Great Recession with respect to that issue. All right, so let me tell you exactly how we're going to categorize these occupations. There's 22 different occupational classifications. The first one we're going to look at is the higher skill group. This is the top 7 occupations in terms of wages. These are occupations with median wages. They tend to pay more than $60,000 a year. And these are occupations like computer programmers, engineers, physicians, lawyers, managers, etc. Our second category is the middle skill category. This is by far the largest category. It's 9 different occupational classifications, but it actually represents 50% of the workforce. And these are jobs, the biggest jobs here are going to be production workers like machine operators, assembly line workers, and administrative support personnel. But it also includes jobs like teachers and construction workers as well. And then lastly, our third category is the lower skill category. The last 6 categories here, these are going to be tend to pay wages less than $25,000, and these are largely low-skill service type jobs: massage therapists, healthcare aides, retail clerks, waiters, waitresses, things like that. So let me show you, with this classification in mind, how the mix of jobs has changed over the last business cycle. So the first thing I'm going to do is show you what happened in the United States during the Great Recession in terms of these 3 categories. I'm focused here on the period 2007 to 2010. Again, the recession itself ended in 2009, but job declines continued into 2010, so this gives us a nice 3-year period to focus on here. All right, and what you can see is that during the recession, job loss was concentrated in these middle skill jobs. Right, and so this largely reflects, when the recession hits and demand falls, workers are looking, as a matter of survival, to find ways to cut costs. And the brunt of this winds up being production workers and administrative support type workers, which are a large part of this middle skill category. But there's also something else going on with this particular recession. Because of the nature of this downturn and being driven by a downturn in housing, construction workers also bore the brunt of this recession, which were also in this middle skill category. You can actually see here that while recessions are tough really for everyone, that higher skill segment actually saw a very small net increase in jobs, which largely reflected demographic trends and an increase in healthcare workers. How did this play out in our region? Well, let me show you the different parts of our region. First, here's what happened in downstate New York. Again, that same pattern held. It's milder, but job loss was concentrated in the middle. Here's upstate New York. Again, a very similar pattern where job loss was really especially felt in the middle skill sector. Here's northern New Jersey. And then lastly, here's Puerto Rico. Right, and so you can see that in our region, that same basic pattern held, where job loss was concentrated in the middle. A noteworthy difference is that in upstate New York and downstate New York, the middle skill workers, while hit, it was a little bit milder. And in Puerto Rico, you can see that job loss was really felt across all three categories, reflecting the long-term decline that's been occurring on the island. Well, what about now coming out of the recession and through the recovery? What's the picture been looking like there? So again, let me first focus on the U.S. and here I'm focused on the 2010 to 2013 period, a parallel 3-year period that looks at what's happened over the recovery. All right, and what this chart basically shows is that job growth has been concentrated at the higher and the lower parts of the skills distribution, and there really has not been much of a bounce back at all in that middle skill category. Right, and that lack of a bounce back in the middle skill category is driven by 3 different things. So first, as I mentioned before, this is a continuation of this decades-long process of jobs polarization, where job growth tends to be at the upper and lower ends of the skills distribution, and the middle continues to shrink away. Largely what's happening here, and you can think of production workers as a good example, is that when the firms lay off these workers, trying to reduce costs, right, as time has gone on, other options have become available. In particular, you can automate or you can ship jobs offshore. And so now when the demand comes back during the recovery, what happens is that these jobs don't bounce back like they used to. Right? So technology and globalization are partly driving this pattern that we're seeing. But in addition, again, thinking about the nature of this downturn and being housing related, right, housing remained weak for several years after the recession ended, and there really wasn't a bounce back in these construction jobs like there was historically. And then lastly, adding to these difficulties, right around the time that the recession was coming to an end, stimulus funding was actually also coming to an end as well. And so that there was already pressure in the public sector from a fiscal standpoint, and that added additional fiscal pressures. And so a good example here is that there's been several layoffs, for example, in teaching jobs that have happened since then. And all of these jobs tend to be concentrated in the middle and has sort of weighed down a rebound in that middle sector. How about our region? What's the pattern look like here? First, again, let me show you downstate New York. You can see a very similar pattern, in fact, very robust growth in the lower and higher skill segments. Here's upstate New York, same pattern. Here's northern New Jersey. And then lastly, here's Puerto Rico. Right, so you can see that same U-shaped pattern more or less holds in our region. Job growth concentrated at the higher and lower ends of the skills distribution. Not much of a rebound in the middle. In fact, if you look at upstate New York and Puerto Rico, not only has there been not much of a bounce back, but we've continued to see job loss in the middle even through the recovery. And again, this largely reflects production jobs, administrative support jobs, and loss in the education sector, teachers in particular. All right, so let me put all these pieces together. What does this all mean in terms of the composition of the workforce? Basically, when you've got jobs that are hard hit during the recession that are in the middle, and then growth in the ends, this means there's been a continuing shrinking of these middle skill jobs. So this is looking at the US. You can see that the share of middle skill jobs shrunk about 3 percentage points over this 6-year period, which is actually a fairly large change in such a short amount of time. And in fact, just to give you some perspective, this 3 percentage point change represents about 5 million fewer middle skill jobs in the US overall. And if you were to look at across our region, you see a very similar pattern. In most places, you see a very similar magnitude change, and in some places, even a slightly larger change in terms of the share of middle skill workers. In downstate New York, it was about 3 percentage points, upstate New York 4, northern New Jersey about 3, and in Puerto Rico 5. All right, so let me just wrap things up here with a quick summary. So a growing number of places in the region have gained back the number of jobs that were lost during the Great Recession. However, the types of jobs in the region have changed. The middle skilled jobs that were lost during the recession have not come back. Instead, the higher and lower skilled jobs have grown during the recovery. All right, and when you put all these pieces together, what this means is that job opportunities in the middle have continued to shrink. So thank you very much, and we'll go from there. Thanks.